Stephen Biggins, Managing Director of Core Lithium. Core Lithium will become, and is well placed to become, Australia's next lithium producer, producing high quality lithium concentrates from Northern Australia by the end of this calendar year.
Good to see you again, Stephen. So you're back halfway through November. Where were we? 57 cents, up to 76 today. But the Aussie market taking a bit of a breather at the moment. What's going on?
Yeah, I think there's probably a couple of factors there. I think in the last week or two, it's been sort of some sort of risk sentiment around Russia and Ukraine tension. And maybe a sort of few weeks away. A few weeks ago was really about the potential for interest rate rises and those things at a macro level.
Right. Okay. Well, I guess we'll see how that pans over the next few days after last night's announcement by Putin. Right. Let's talk about you. Last time we met, we were actually on site with you. You showed us, where you were in relation to the conference centre in your hotel. I was taken by how close the project is to civilization. You're not out in the middle of nowhere. You're pretty close to town. That's useful.
Yeah, that's right. That's one of the key advantages of the project is its location. Adjacent to the capital infrastructure of Darwin. We can plug into grid power. We're an hour's drive away from the suburbs of Darwin. It's great.
And where's that put you in terms of relations? Because we're seeing a lot of projects being cancelled, held up indefinitely, or at least struggling with permits and licensing in terms of being able to give market timings on this. You're well under construction now. The proximity to town, was that a sort of advantageous to you in terms of being able to have conversations about job creation, etc.? I mean, how did all that period work?
Yeah, I think that's genuinely worked in our favour as we've looked to build the project. It's been an attractive opportunity to offer employment in a mining project within an hour's daily commute from the suburbs. So we've been able to recruit very well for our owners team in Darwin, with probably something like over 80% of our sort of team are local Territorians. Lucas, our mining contractor, have experienced the same thing. There's a lot of people that live in the Northern Territory that work in the mining industry around Australia that have been very happy to come home and work in a mining project and spend their time with their families at nights.
Okay. Well, look, last time we met, there's two things I want to get out of today. One, obviously, you're in that construction phase at the moment and you're looking to get in production by the end of this year, however that ramps up into 2023. And the second bit is the blue sky, right? You're a $1.2 billion company. Congratulations. But you got to keep going. That's the tough bit. So I want to talk about some of the blue sky and some of the press releases I've seen recently. So let's talk about the construction. How are things progressing?
Yeah, really good. So we're very much on schedule to deliver first product from the project by the end of this calendar year, as we planned. Lucas have started the project very well with site infrastructure, scraping the top off the ore body, and setting up the foundations, if you like, for the above ground engineering. With our schedule rolling out that we will have Primero, our EPC engineers, starting construction of the project in of the processing plant in late March, post the end of the wet season, and then essentially we run both the mining and the process plant construction in parallel to enable us to be in production by the end of this calendar year. Great.
Okay. So things are going well. Are there any other kind of studies or engineering or otherwise technical that you're having to do concurrently? I couldn't quite pick that out of the last couple of interviews that we did in terms of what else is happening during the build phase.
Yeah. So in regards to sort of delivery of first product, that plan is engineered and it's being built right now. More so, the new engineering work that we're doing is looking at what are the levers that we can be pulling to bring forward and expand production from the project as soon as we're able. We've got every incentive to be looking at how we can expand production from the project. With lithium prices now above $3,000 a tonne US, forecast to increase even further this year. Core will be producing lithium and entering into that market at a very high price later this year with very high margins. And as I said, we've got every incentive to be looking at how we expand production. And we've got a number of strategies there. So the first one, which is, we're investing heavily into exploration and resource drilling. We put out results only a few days ago, some terrific results outside the existing resource at BP33, where we hit something like 57 metres at 1.8% lithia, with the ore body increasing in grade and getting wider at depth. So that resource and that prospect will get bigger. We're investing into additional drilling. We're still waiting on drilling results from Carlton, which we think will be positive and support our confidence in our goals to increase resources and reserves for the project. We're also waiting on exploration results from a number of other prospects from our new acquisition. So those things will feed into our ability to grow resources, extend mine life, and also looking at engineering opportunities to bring forward production. Okay,
so, and I do want to get into that in a second, but if I look back at the Ganfeng and Yaowa offtakes, can you just again remind me in terms of what do those deals look like? In terms, we've seen some money come in from Ganfeng, obviously with your last raise, but with those offtakes, how do they? How does the company expect money to kind of flow in, and what's the timing of that, and what do you do with that, and can you use that as any part of any negotiations now in terms of additional fundraising that you may choose to put in place depending on how you want to deliver the phase 2 components? Because if you're looking at the expansion thing, it's down to you really to kind of work out the timing of that.
Yeah, so in regards to the offtakes we have with Ganfeng and Yaowa, together they represent 40% each of production. With pricing, looking to replicate spot price. We will be exposed to spot price in our production. We've also got 20% of production which is uncontracted that we may look to put into the spot market later this year. But there are still no shortage of other parties that are offering incentives to sort of sign up some of the remaining offtakes in the project.
Right, but you haven't entered into any conversations. You've been approached, but you're not looking to monetize that 20% now. You're keeping that still as an option depending on what's happening in the marketplace. How are you approaching that 20%?
We've got a whole bunch of options that are really, they were good outcomes for us that we're sort of weighing up.
And these just again remind me, the offtake with Yaowa and also Ganfeng is on everything you've got or part of your assets. If you do go and do some blue sky drilling elsewhere, I mean, are you able to carve that out? I mean, how does it work?
Yeah, so those offtakes are for the first 4 years of production, and they represent together about 80% of production. So we've got opportunities, if you like, to increase our production profile and to deal with the remaining product how we see fit.
Right, and how do those deals typically work? You're getting towards they don't wait till the end of the 4 years or up and go. Now what? It's like, are there kind of options during the course of those 4 year term for them to renegotiate or at least have a right of first refusal?
Yeah, we'll have sort of very sort of clear communication and open keep good communication and relationship during the life of those offtakes. And we'll sort of assess where we're at towards the end of those.
Right. Okay. So, but they'll be doing everything they can to make sure the relationship is solid between now and that moment, and down the line, 4 or 5 years down the line. Because it's interesting. Because does Ganfeng have equity?
Yeah. So both Ganfeng and Yaowa are invested alongside the offtake agreement. So. They're both sort of equity holders in Core and particularly and they'll both be very happy investors in Core.
Yeah, no, I bet they will on an equity basis, but in terms of protecting future supply, because again, we've had conversations with lithium producers and lithium market commentators about the number of lithium projects that are going to come online in the next 2-3 years. It's not as much as people think. So, in their case, is that equity a kind of defense mechanism and ensures that they're still at the table talking to you? And does that restrict your ability to negotiate better margins, better transactions?
Yeah, I think the objective of that equity was, that was really support that we got from both those organisations as we're leading the project into development. So those investments enabled us to get into production and support us getting into the position that we are. We don't see those equity positions as being significant enough to really affect our sort of decision making going forward.
And it doesn't put any other strategics off either.
Yeah, we've not found that an issue with any party that we've been dealing across the globe.
Okay. So in terms of like the phase 2, the kind of expansion component, I guess it's 2 bit. There's sort of the product that you'll be producing, and then there's let's scale this thing up even further. So on the technical, so the product on phase 1 is what?
It's 175,000 tonnes per annum for sort of on average for the life of mine for the project. Potentially producing up to close to 200,000 tonnes per annum. And we know from sort of the process design that the process plant's actually engineered to produce, have a higher production capacity. But we'll conservatively, it's currently rated at 1 million tonnes per annum.
Right, and in terms of your obligations with your offtake partners, you obviously have to deliver into a specification for them. If that was to change further down the line, is that an expensive process to adjust?
Yeah, I think the quality of the product that we produce from the project is excellent. So in regards to chemistry, meaning specifications around iron content, mica, size specifications, that's one of the advantages of the project is that all of the lithium in the system is spodumene. So it's a really excellent quality project, excellent quality product, good chemistry, and we've not really had any queries from any of the parties that have done qualification on the product to date.
But if you were to move sort of further downstream, as it were, in terms of capturing more of the margin, i.e., moving to the hydroxide, what's the investment look like from your side? What's the time frame for something like that?
Yeah, so in the medium long term, we think there's an excellent lithium mining project that we're building right now. There's the opportunity to sort of leverage that to its fullest in the medium to long term. So we're investing now alongside funding from the Australian federal government in feasibilities to assess the opportunity to move into downstream lithium chemical processing in the future. So that's something that we will advance and progress, over the next 24 to 36 months to sort of move through feasibility, move through regulatory process, and alongside that, be sort of considering the range of commercial options we have to deliver the project. And there's no shortage of parties that are interested in potentially partnering in how we might deliver that project in the future as well.
Right, and so given what prices are doing at the moment, you're not you don't feel kind of compelled to expedite matters in terms of moving things faster. Is it things will move at the pace they're currently moving, and the market will be what it is when you get there? Is that the approach, or do you think that you can try to accelerate things?
I think on sort of downstream processing, no, I think it's going to run through the medium to longer term pathway. For stage 2 expansion and extension strategies, they are strategies we're investing in right now. So exploration and resource drilling to grow the resources, to lay the foundation for our ability to extend and expand production, and considering those engineering opportunities that are in front of us that can potentially enable us to bring forward mine production and expand production on an annual basis.
Okay. And so I noticed there's a question sent in by someone. Because to Yahweh announced recently that they'd signed an updated offtake agreement with you guys, but you haven't mentioned that. Was it not significant?
There was some commercially sensitive terms that we resolved with Yahweh, as sort of we've done from time to time along the 4 years or 5 years we've had the relationship with Yahweh. We're quite happy with where we've got to with that.
Okay, so nothing, it's a course of business, nothing significant, just tweaks.
Correct. It's about sort of aligning the agreement, updating the agreement to reflect, sort of current markets.
Okay, so let's move on to the second component there of growth, which is around some of the drilling that's happening. You've mentioned, we've seen some of the press releases. You mentioned some of the drilling earlier, and you're awaiting assays on a couple of the projects, including the new acquisition. But what's the intent with the drilling plan, the kind of expansion, resource expansion, or new drilling to I guess deliver a bigger story to market, which becomes difficult when you're at 1.2 billion, right?
Yeah, well, we've got huge opportunities, and we're working in the binopegmatite field, which we know hosts hundreds of lithium-rich pegmatites. And we're working our way through drilling those. We're getting results coming in now, which is great. It's taken us a while to get there from the drilling we completed in 2021. Laboratories have been a bit late in Australia in delivering results because of sort of the load that they've been under. But we're now receiving results. We've seen that for a couple of days ago from the drilling results from BP33. We're expecting, new results that will support our confidence in the continued resource growth. We've got our own objectives in regards to where we want to take the project, but let me put it simply that the 10 years that we've defined today is very much just the beginning. We will deliver a very long life lithium project out of Finniss and be producing high quality lithium concentrates for many years out of Northern Australia.
Right. So just want to put it real in simple terms, because there's a lot of new investors coming into this, but don't actually understand necessarily the terminology or how it works. So you've got the current life of mine is 10 years, you're saying, right? You're going to try and expand that. So this is a multi-decade resource. So just back to the drilling. So how are you going about planning the order of play in terms of what you're going into next? What's the point of that? Is it a resource update? Is it expansion? Is how many meters are you drilling? How much money are you allocating to that? Whilst the kind of the cool, calm, quiet build process goes on, you can kind of create some buzz over here with the drilling. So just the plan of attack and why would be good to understand.
Yeah, sure. So there's a whole bunch of drilling results that we expect over coming weeks now from the 2021 drilling. We'll utilise those to update our resources and sort of modify our mine plans over coming months. Then in the next quarter, we will be then ramping up our exploration resource drilling programs again for calendar 2022. So that will be further investment into growth, which would expend to substantially grow resources, life of mine, and add to our capacity to extend production, as well as us in parallel undertaking studies about how we can possibly expand production.
Okay, and so and to what end, right? You've gone through the exploration phase and process yourself. You're getting this thing, you've developed it, to the size it is now, and you're getting this thing built so it'll be ready, up and running, and delivering it to contracts. So you've done all the hard work. What does the board want to do? Do they want to sell this thing? Do we treat this as, and shareholders treat this as some sort of cash machine, ATM, where you hopefully whack out a few dividends along the way too? Or do you flip this out to someone else to pick up?
Yeah, the key objective that we have is to get into production as quickly as we can. And we're right at the front of the pack of new lithium producers around the globe to be able to expose our company and our shareholders to a very, very high price lithium environment with prices above $3,000 a tonne, and margins of the project are huge, right? They are huge. So once we're in production, we'll be providing operating revenues and earnings that will justify our pricing and beyond. Alongside that is we've got every incentive to deliver as much lithium into that high pricing environment, not only from a commercial perspective, but that is the strong message we get from our customers and from potential customers and from basically the whole of the lithium battery supply chain. Is we need companies like Core to deliver more lithium into the market so that we can build enough EVs to meet the car manufacturers' targets and government's targets for reducing emissions around the globe.
But I guess the bit I'm trying to get to and trying to understand, because again, from new people coming in, because you always need new investors coming in, is what are they investing into? They're investing into a organization, a company with full intent to get into production, do the expansion stuff, increase life of mine, or are they going to flip it? Because if it's a flip it, there's a probably easy 20-30% uplift for them. So that could be exciting to people. Or if it's a dividend paying company because it's producing cash within a high margin environment, then that's a different type of investment. So just going to get a sense of where you guys are at in your head.
Yeah, I would suggest that we're in an excellent position where we're delivering a low risk production project. We're fully funded. It's going to be operating at high margins, and we've got huge growth opportunities ahead of us to continue to expand production and maximise our exposure to the lithium sector and the lithium battery sector and the EV sector that we're working in.
Right, and just also to kind of clear up on, you're going to be in production by the end of this year, commercial production, right? And that means lots of things to different people. How quick is given the build period is really quick, it's a simple product initially, how quick is that ramp up period through to nameplate?
Yeah, so we're in our schedule, we're allowing 3 to 6 months to move from first production into commercial production. So we've got targets around the middle of 2020, calendar 2023, to hit commercial production.
Got it. Okay, right. That's kind of interesting. And so if I may come back to the drilling, because I think I asked the question, but I maybe missed the answer, which was you're funded for the build. What's the funding for the drill program, and in terms of meters or dollars, or so people can get a sense of the scale of that? Yeah,
they're pretty significant, and as we sort of move into the commencement of those programs in coming months, we'll talk to those details.
Right. Okay. So you'll give guidance on that. And just on the assays outstanding at the moment, because you're looking to increase are the assays that are outstanding at the moment to increase the resource, or are they the kind of expansion drilling?
Yeah, so those assays are both exploration and resource drilling. So they'll look to expand resources, make new discoveries, and bring resource to reserve. So increased level of confidence in those resources.
Right. Okay. And with regards to and those on which tenements were they? Sorry, so far.
Yeah, that's across the Finniss lithium project, and including the new acquisition that we're in the process of completing.
Right. Okay. And should we come to? There's a kind of a few sort of byproducts that have been mentioned along the way too, in terms of tantalum and niobium. Are they commercially meaningful, or are they literally? Yeah,
I think that the main game really is production of lithium concentrate.
Okay, so we shouldn't get distracted. Yeah. Okay, gold. We talk about occasionally when we've caught up. We talk gold. What's the plan with that? Because again, high gold environment, but are you the guys to do that, or are we spinning this out?
Yeah, so I think our focus really, our strategy is to focus on delivery of our Finniss lithium project, get that into production, expand our ability, expand our lithium resources and reserves. We'll continue to undertake some level of gold exploration alongside that at Finniss. But really a strategy on other commodities, sort of sort of a secondary level to those key prime objectives around lithium production.
But in terms of there was some money spent in 2021 on the gold project, not a lot, but some. Again, to what end? To make it a little bit pretty and attractive to someone else to do, or just understand what it is that you've got, because you're in no rush to, and you're not on any obligation or otherwise to advance that yourselves. I mean, what's the idea there? Because it seems incongruous to have lithium and then gold in the same company. It's confusing.
Yeah, I think we're in a great position that we're really well funded, and the optionality is with us to sort of deal with those additional commodities as we see fit from a timing perspective, and how we might deal with them from a structural perspective.
Okay, again, this is a bit tough one, because who knows, in 1.2 billion, is there any value being attributed to the gold project at the moment?
Yeah, I don't know what's attributed value-wise to the gold project. I would suggest most of it's going to be forward-looking to us getting in production on lithium.
Okay, and lithium prices, as we've said at the outset, are really high. Sustainable. I mean, what are you seeing in terms of the supply side of things? So obviously, the demand side is, I think well understood, right? It's a kind of funny one. Lithium's been one of those things that perception 3-4 years ago was there's enough lithium. South Americans will turn the tap on and the market will be flooded, right? I think since then, the dawning realization is that projects are not getting into production easily. They're not getting funded, quite frankly, to get into production. The supply side is probably the issue here. How are you seeing the market play out, and what's that do for the sustained pricing within lithium at the moment?
Yeah, I think that supply is going to struggle to keep up with the compound annual growth rate of demand growth. And we're seeing hundreds of billions of dollars of investment downstream into lithium battery production capacity and electric vehicle production capacity. But there hasn't been that level of investment in raw material supply. We know brine projects take a long time to sort of move to increase production capacity. And very simple, well-funded mining projects in tier one mining jurisdictions take 6, 7, 8, 9 years to move from start to into production. Let alone the issues that are going to be faced in jurisdictions that have struggled with approval for mining industry and support of the mining industry in sort of the US and Europe over the last few decades. And we're sort of seeing some of those experiences, sort of with developers. I think that they will be successful in moving those projects to development, but it'll take longer.
It's kind of. I mean, obviously, you've tied yourself to China and Asia. What are you seeing in Europe at the moment? Because we're seeing a lot of projects being cancelled for various reasons. Rio, Serbia. That was a kind of big surprise to the market. That's taken a lot of lithium out of the market, but also made people realize that perhaps jurisdictional risk is a very real thing, even for super big companies. And then the European attitude to not in my backyard, at the same time as trying to create their own ecosystem for battery metals and EV. It seems quite disconnected over there. So do you think you've made the right call by going with Ganfeng then?
Yeah, I'm not sure I can see the relationship there, Matthew.
Well, I just mean it's like, you've gone for the easy, obvious. I'm going with Ganfeng. That's the easy option. They've got the balance sheet, they've got the expertise, and they need the lithium. And then we're looking around Europe, and anyone who's going to be able to deliver lithium into the European ecosystem could be the beneficiary of quite a fragmented approach to actually delivering the EV vision, it seems.
Yeah, I'm very hopeful, and I think there's some great opportunities for Europe to expand its lithium chemical conversion capacity and a move further down the supply chain, but that doesn't exist yet. So it seems like a very sort of normal and natural relationship for us to be working with the existing global conversion, lithium conversion community in China. And we look forward to Europe moving itself sort of further down the supply chain, so that it becomes a sort of a part of the sort of natural supply chain that Australia can connect with.
Okay. Look, Stephen, appreciate your time today. I mean, we kind of covered the kind of gold component. I guess all anything that isn't lithium is secondary for you at the moment, whether it be uranium, gold, silver, copper, lead, whatever. That's secondary to you. Deliver this project by end of the year. That's your number one priority, and you're going to give us guidance on the drilling component, in terms of spend meters and what you're trying to deliver in the next this quarter. Are we going to see that?
Yeah, as we ramp up exploration and resource drilling at the start of the second quarter, it's appropriate then when we announce that to the market that those details are announced then.
Brilliant. Okay, Stephen, appreciate your time. Stay in touch.
Great. All right. Thanks, Matt. Bye bye.